Yeah, baby. Look, I'm gonna talk to you later. I gotta talk to my man about them business real quick. Woo! Yeah, bro. Forex been popping lately, man. We winning out here. Running out of space for this money and shit. You need to get in on this. You see me out here in these streets. Big moves. Big shit popping. You see me, right?
All I see is a broke boy that ain't got no Bitcoin that's acting like he came up off the stimmy. Matter of fact, don't you owe me like $500 you gonna turn into $5,000 last week? Come here.
All right, guys. So we got Devin from Bmore Accountable. And been waiting for this moment to talk to you, man, because we got the stimmy. We got some tax season coming on us. Actually, it's on us, right? Fully blown on us, right? Mm-hmm. And I feel like somebody like you, I got to talk to you about getting my money right. Save me from giving it all away to the government. Nothing against the government. Not trying to evade no taxes. I'm just trying to avoid them, right? So I thought, who should I speak with? My tax guy, who's soon to be a CPA.
Pray for me.
You're going to make it, bro. I believe in you. So today I want to talk about the stimmy, of course. I want to talk about reducing my taxable expenses and trying to make sure I'm set up for the future before, this season is upon us. So plan for the next season, right? Mm-hmm. And it's one of those situations where I feel like other people might need to learn this too, right? So that's why I want to talk to you on this and try to educate others, because I'm being educated by you every time I call you. I'm sorry to call you so much, but I needed this info.
I need people to call me too, because it makes me have to do research, figure things out sometimes when I don't know.
Right. No worries. So. But you know a lot. And we're going to talk about what you know right now. So first off, let's go through who are you and who is or what is Bmore Accountable?
Okay. So my name is Devin Williams, and Bmore Accountable is, of course, accounting and tax firm, but it's different. It's more so about it's teaching individuals how to be more accountable or accept full accountability for their business. So, understand, learning. So, you might be a person like, say, a barber or something like that. You cut hair and, somebody, one day you just make a whole bunch of money, all your friends coming to you and all that kind of stuff. IRS finds out and they're like, you owe us a piece of that. And, you're just doing what you love. You don't know that, you're going to get hit with a tax bill. So, but regardless, you're still responsible for that tax bill, whatever the case may be. So be more accountable is about, had you had known, maybe you could have spent the money on something, you invested it, or you could have, been prepared for the taxes that would have came. So just to teach you how to be more, make you more aware, and you can make more deliberate decisions and things like that.
Oh, so the name is literal. Be more accountable. I love it.
Be more accountable, You're already accountable, but let's be more accountable. Let's make it so what's going on.
Perfect. That's what we're trying to do now. So especially for me. So on a personal level, before we go into the business side of things, let's talk about something real personal that everyone's kind of probably thinking about right now. When it comes to the stimulus package, lately we've gotten it's a third one. I think it was $1,400, right? When it comes to the stimulus, is it something that's taxable?
It is not, thankfully.
That's good to know.
They probably would love to tax us on it, though. They love to tax everything. They give you money and tax you on it. It's crazy.
Exactly. I was shocked when you told me that I got to add my returns from the previous year as an expense. That means a taxable amount of gain on my next set of taxes. I was like, what? Yeah, you're taxing me on money I got back from the government? Oh my God.
Yeah. They be like, oh, you got money from Maryland? Oh, let me. Federal be like, yeah, you got money back from Maryland? Let me see that. Let me get a piece of that. Even all of it.
There's no
even unemployment. Unemployment this year was, thankfully, they gave people a break. But in Maryland, unemployment is taxable, which you would think, I'm unemployed. Why am I paying taxes on money that I really don't have? You're giving me this because I don't have money. I don't have a job right now. But normally unemployment is taxable. But they said this year for 2021, and if you received it last year, it's not taxable. A lot of people didn't know they didn't have taxes come out of it, so they got hit with a tax penalty at the worst time ever.
Right. Like, so that was purely because of COVID that they switched it to allow it to be non-taxed.
Yep. Crazy part about it is like a lot of other states, like I think Jersey, they don't tax you on unemployment, which makes sense to me. But we haven't, Maryland hasn't done it yet, and of course the feds, they don't do it. They like we tax you on all of that. So
Good to know. We might have to move to Jersey.
right.
but
they
but
hit
then
on straight
again,
up.
I don't want to be unemployed. I'm trying to make sure, I have
Right.
some income and start my business
Mm.
off right. But let's say I didn't get the stimmy. Let's say I somehow got skipped. Is there some way of recouping that in some form?
Yes, it is. Yes, it is. So yeah, say for instance, you didn't file your, or you're not up to date on your taxes, you probably didn't get all your stimmy or stimulus. Let me, stimmy. I've been using that a lot too. But you didn't get all of it. You can claim it on your 2020. When you file your 2020 tax return, you claim it on your 2020 tax return as a rebate. So whatever you are getting, your refund will be increased by the stimulus that you didn't receive, or if you owe for whatever reason, your liability will be reduced by stimmy you had. So it could save your life. Some a lot of people get saved that was owing money and didn't get their stimulus, and the stimulus saved them. So it gave them another year to get things right with the exemptions on it.
Good to know that there's ways to credit back in case you somehow didn't catch it
Mm.
or you somehow didn't file in time to get
Right.
qualified.
We
What
got
are
claims
some
last year.
what are some other ways that people personally can reduce their taxable expenses that may not have a business? Is there something else they have as options that they could plan for the next year taxes if they didn't do it this year?
Okay, so if you want to save on your taxes, I mean, one thing you can do definitely is investing. If your job has a 401k plan, something like that, you can, participate in that, because anything that you put into your 401k lowers your taxable base. So say you make 80,000, you put 10,000 into your 401k, it'll lower your income that the government can tax you on by 10,000, so you only get taxed on 70. And then of course now you got 10,000 sitting in a investment account that's getting interest and things like that. Um, Something called a flexible spending account, which is good for medical expenses, things like that, or if you have other things you want to do, like you can't get your body snatched and nothing like that, can't that's not deductible. But you can use it on other medical expenses, or buying glasses, frames, lenses. You want to get, even if you want to get, I want to say braces. No, braces don't count. That's cosmetic. But
Damn.
yeah, we wish. But things like that, you can use that, and it'll be almost the same with the 401k. So you tell your good job, you would tell your job to put like maybe 5K to the side or something like that. Well, actually, I might be going to. I think it's like 25. You put up to 25 to the side, and it will reduce your income that the government can tax you on by 2,500. And you can use that 2,500 towards other medical expenses or things that you need, like say lenses, glasses, which glasses cost a lot.
Yeah,
things like that.
makes sense.
Um,
Of course, we gotta warn that Devin's not your CPA or tax advisor unless you hire him. That's different.
Right.
But so
Right.
we gotta make sure that people know to do their own research in their state and wherever they are. So everything doesn't apply the same. So do some research and talk to your tax professional. But one of
I can be the person. If you want me to be a tax professional, don't feel free to reach out.
Yeah, be more accountable. What's the way they can get at you though, just in case?
Oh, to get me, email me, D Williams. My first name Devin Williams, or D Williams at Bmore Accountable. You can see me on Instagram. I got a Facebook page, Bmore Accountable. I got a website, Bmore Accountable. It's only one Bmore Accountable.
Right.
So wherever you type it in, it's gonna show you me.
That's good.
Yeah.
Be more accountable, people. That's what you need to do, and that's who you need to contact.
Right. Exactly.
Easy. Well, yeah. So talking about stuff from that's kind of like job related, because is there some way for me to deduct my training?
Your training.
Like say I got some certification because my job required it, and they sent me out to be trained, and I paid for it, and then they reimbursed me.
Nah, they reimbursed you.
hey, I'm just saying, I paid for it though.
You paid for it. You know what? That was the thing back in the day. Maybe about a couple of years ago. They actually took that deduction. You used to be able to get paid for unreimbursed expenses for your job. Like say you had a job and they had you pay for your training, or they made you use your car to drive and things like that. You could deduct that before, but people kind of abused it. They were putting expenses that they were reimbursed for, because maybe they made you drive your car, but they gave you like a stipend for your gas or something like that. And people would say, "Well, they gave me a stipend, I got that, and I'm a double dip. I'm putting on my taxes and say I spent this money. I got the gas receipt." So just took that all out of there. You can't even write off any of that stuff anymore, unless of course you have a business and it's for your own personal business. So you have a business and you travel, you get yourself some training. then you can write it off. But as far as like working for someone else or a job, you take a training for them and they reimburse you, no. And even if you pay for it yourself, if you're just working for this particular job, you're employed by someone, you can't take it, which is,
They're just
sad,
taking
right?
away all the options for us, man.
Take it
So,
away.
so it's like they're forcing us to start businesses, right?
Pretty much. They want you to be employed so they can get more of your money. Yeah.
No, that's why we're here trying to educate them to make sure they know the right way to avoid taxation, right?
Right.
Not evade it, not run away from it when you owe something, right? But to
Avoid
avoid those hits. So for someone who does own a business, I've heard of like ways of using your home in a certain way. Like, can you elaborate on how that works when it comes to taking some amount of space in your home and claim it as a office?
Okay. So the government does allow you to have a portion of your office, like you have home, especially now, during the pandemic, a lot of people have been working at home, setting up offices, things like that. So if your office, it has to be a dedicated area, before you can't be like, oh, I got the whole basement, it's my office. I mean, if it is, it's got to be used off of, off of business. Don't have nothing down there like, a big screen TV, the theater room, and say, yeah, it's my office too. That's my break room. No,
In
it
my
can't be
gym,
like that.
yeah.
Right. Something like that, right? My gym, because they don't do it no more. At least I haven't seen it in a while. But they used to come to people's houses and
Ooh,
check the IRS when they had time, when they had the energy to do that. But basically, as far as how you calculate it, you would measure the square footage of the area used for your office against the total home square footage. You could write off that would give you a percentage, like maybe 20, I say 25%. Then you can take a 25% of like all your utilities, internet, things like that, water, um, interest on your house, things like that. Or if you're renting, 25% of the rent. And then of course the actual, if it's your house, the total cost of the house. So you pay 250 or 300,000 for your home, you can actually take the depreciation, 25% of the depreciation of the home. So things like that, which is like always, and all equipment and stuff. Well, that's something different, but everything you buy for your home office is of course deductible and all that good stuff.
okay. So you can do some home things like even the internet and
Internet,
phone.
all
That makes sense.
improvements on the house, yeah, anything you make. So you make improvements, you build like because you have indirect and you have direct. So say you take money to actually build this office, that would be considered direct. So you can take 100% of that. And indirect would be anything you do to the whole home, like say you put some solar panels on the roof or something like that. Then you
Yeah,
can take 25% of the solar panel cost,
gotcha.
things like that.
So the chair, office chair, would probably be almost fully deductible over a certain time,
Yeah, that
or
can
the
be direct.
computer.
Yep,
That
computer, direct, yep.
totally makes sense. Are there any other things that somebody with a business can use to reduce their taxable expenses that could off the top of your head?
So definitely, anything that's related to you that's necessary for your business to run, that you need, like so for example, yeah, you buy supplies for for the printer, or you say you sell hair, you buy hair, you do hair, you clippers, or cut hair, things like that. Anything that's necessary, your security, you might need a uniform, things like that. All of that. What else? Rent, like paying office rent, things like that. Mileage if you drive your vehicle, use your vehicle, you have a car. Mileage or the gas receipts and maintenance on the car. Of course, it depends on if it's 100% for the business or not, how much you can take. Almost like the home, it might just be able to take a portion. Cell phone, same difference. If you have a dedicated line, of course, 100%. If it's like your personal cell phone, use part of it for business, percentage. But just anything, as long as it makes sense, as long as you can prove it, you can take it. As long as, if you have to explain it to the IRS and you can tell them, yeah, it makes sense to them, then you can deduct it.
Cool. In the sense of the modern era, a lot of people like now are like trading and doing stocks and stuff like that. And I'm assuming they're doing it from home. So technically, I would hope that they can claim the office space they're using to day trade as something that is for the business. So when it comes to that side of things, I've heard that there's taxes that have to be paid when you kind of trade, like every trade. Is that correct? Like, how's that work out?
That's true. So day trading, most time that's when people buy and they sell it at a profit. Like usually it's short term. So you have short term, you have long term gains. Short term gains usually pay more taxes on those. It's higher tax rate, if you would so to speak. It's based on your tax bracket that you're actually in. So let's say, for instance, you're making pretty good money. You might be in the 30% tax bracket. If you sell and buy, you doing day trading, you would pay 30% of your profit. Now, long term is the more, and that's under year. Anything under year is short term, of course. Year or less is short term gains. They have long term gains, which is a year plus. You get a significant tax benefit for those that could be depending on your income as well. That could be 10%, 15%, 20%. So you already know the highest is 20%. You know, you saving 10% if you're in a 30% tax bracket or whatever. So or it could be 20%. You know, if you're in a 10% tax bracket. But so holding, of course, can be more beneficial depending on what your strategy is. You know, maybe you're trying to have, I don't know. It depends on how much money you're making, honestly. I don't day trade because I'm not good at it.
Right,
I
right,
don't have
right.
the time. But I'm more like a buy and holder, so I'm more looking for the long term.
That makes sense. Like it's like incentivizing you to buy and hold by like telling you, look, you'll get less out of your pocket if you just hold on to the
Just hold
bastard.
on to it. Yep, yep.
Because short term, I mean, if you're not good at it, you might
Exactly.
double up on the losses, like, or even break even and still owe money. And you're like, what just
Hmm.
happened? But
That
so
was
while we're
definitely
on
me.
that topic, is it possible to sell at a loss and use that as a deduction? Is that something?
That is definitely something. Like speaking of people that thought that's why I don't day trade because people that thought they knew somebody like me who thought I knew what I was doing. You know, I got some bad investments. I thought I was going to buy it low and sell it high, and I bought it high and sold it low. But I ended up it worked out for me because I sold it at the end of the year, and it would happen by accident. I didn't think about it, but I sold it at a loss, so I was able to claim that loss on my when I filed my taxes, which helped me lower my taxable income, helped me avoid some taxes, so to speak. We're gonna keep it on topic. A lot of people do that. Some people say they plan out if they know they're gonna have a loss, they might sell some stuff at the end of the year that they have a loss on to be able to take the tax benefit when they file their taxes, or vice versa. Like you have some things you're gonna get a gain on, maybe wait till the next year to sell it, at the beginning of the next year. You know, so you don't have to pay the taxes on it that particular time.
That totally makes sense. Yeah. It sounds like something that you accidentally did, but I feel like you didn't do it on accident in a sense because you benefited from it, or let's say you benefited from it without being an accident because you're savvy in taxes. You
Yeah,
understood how to take the loss and turn it into a gain.
yeah, understood. But it's like I didn't want to take the loss. I didn't want to take. I was taking the loss of like, okay, it's going down. It's still going down. It's going down. Let me stop it from going down or whatever. Let me just sell it. And this it stopped me from taking a bigger loss, but it ended up benefiting me because I wanted to hold it. Cause I thought it was
Right.
gonna go back up, but it never did. Actually, it's way worse now. I think I sold it at like $30. I want
Mm-hmm.
to say that stock is probably $12 now.
See,
So
hey, that's what I'm saying. Tax advantages, and you got out earlier before it bottomed
I
out.
was like, go,
So it's a win-win.
yeah,
And luckily you're a, tax savvy, so you figured out how to make the most,
make it
squeeze the
work
most
for
out
me.
of it.
Yeah.
So that makes me wonder, like, some people choose to use these software like TurboTax, H&R Block software. What is the benefit of going to someone who's studied and understand the tax laws versus using software like TurboTax?
Okay. So TurboTax, of course, TurboTax and TaxAct and all them, they ask you questions. And that time, you don't always know what those questions mean. You know, they say that you buy a house or, or that you just don't might not know, or you might not know what a long term or short term gain or loss is or gain or whatever. So somebody like me, of course, I know what it is because I have the experience more. So I've seen it before, I dealt with it, I have seen plenty of people. So the benefits, like, you don't have to guess. They bring it to me, and I can ask you the questions, and I can explain it to you if you have questions about it. I'll make sure you get the maximum benefit of on your tax return. Like if you had losses, we're gonna take your loss. If you had gains, we're gonna figure out how to lower, take any deductions we need and things like that.
Gotcha. So you're probing them more than the software would, and probably making more suggestions. You definitely did that for me. I'll say that. Like there was like at least way more things you spelt out. Like, Ian, did you not go to school that year? Like, hey, when yes, that is technically classes, my guy. Like
Right? Yeah,
you were
right. Stuff like
studying.
that.
So did you pay
Hmm.
for it? And yes. And I'm like, okay, I didn't know that was one thing. So I felt like that's one of the greatest things about it. I tried using TurboTax before, but I felt like it wasn't hitting all the points that it needed to trigger me to answer correctly. And talking to someone was definitely more comforting, and it also like pulled more of my things that I weren't thinking of. And probably the biggest factor is that because I can call you before the tax season comes up,
Hmm.
it's basically been helpful to prepare for tax season, right?
Right,
Which
right.
is probably the best part of doing this. You want to prepare. You don't want to wait till it's creeping up on you, and then you're like, oh God, I got a week to file this, or I need an extension and whatever. And yeah, so I think that might be the biggest benefit for me out of using something that's like a robot.
robot gonna just tell you, ask you some questions and put it in. You put the numbers in. All right, we good. But like they don't make. I was looking at the numbers. I make sure they make sense. People have came to me and put their taxes in TurboTax and then showed me what TurboTax they got TurboTax. Like, no, that don't look right. Or that's on the wrong line. Or it's not what that meant. So yeah, like you said, having that person there one on one that can explain things to you, not just like a one way type of thing. Data input. It's way better.
Yeah,
at least I believe it is.
Bmore Accountable. Got to go to them. They'll help you out.
I will. I definitely will. Yep.
And just before we wrap this up, I got to talk about this. There was an extension last year on tax season, right? What is it? What is the situation now? Like, are we getting an extension in 2021, or are we screwed? We got to do it as soon as possible, ASAP.
So sadly, for me, the tax preparer, you do get an extension until May 17th this year. Last year was July 15th, I believe. Oh my goodness, that's a long time to just be sick. April 15th, we look forward to that. We done. We not working no more. We going on vacation. But when they went to the July last year, it's like you couldn't do nothing. It's like, oh man, I gotta wait till July. People wait till the last minute, wait till July to call you and stuff like that. It's crazy. So it's like this year's May 15th. 17th, excuse me. It actually makes sense because they made so many changes last minute. The state and feds and things like that. So they gotta give people more time to file their stuff and get things together, stuff like that. So that's cool. I'm not too hurt about it. Y'all just don't wait till the last minute. If y'all decide to come to me and call me,
yeah, people don't wait to be accountable. All right. So contact Devin at Bmore Accountable. Devin, how can they contact you?
So they can contact me. All right. So you got www.bmoreaccountable.com. The site is a work in progress. Please don't judge me too hard by it. Then of course, IG at Bmore Accountable. Facebook, www.facebook/ with that little slash thing, Bmore Accountable. So you find me everywhere. I don't have a Twitter. Don't look for me on there. But email dwilliams at bmoreaccountable.com. Just type it in Google. You'll find it.
Yeah, Google this man. He gonna pop up, bro.
I'm gonna pop up. I might not be the first thing to pop up. I'm be close, pretty close.
You're gonna be the top, yo. We're gonna make sure you get there. You ain't a web designer, you're a tax guy. It's okay. So we're gonna get you there. All right, bro. I appreciate you. I feel like I'm a little bit more knowledgeable. I know I got to hurry before deadline and make sure, I do my stuff and everybody else do theirs. Stop waiting, people. There's no point in waiting.
And just remember, like extension, of course, extension to file, but not to pay. If you owe them money, they want their money by April 15th. You know what I'm saying? They don't care. So they'll give you time to file, but they want you to start paying by April 15th or before. Or they get you penalties and interest start accruing on you anything you owe, if you owe. And if you don't owe, I don't know why you wait. If they owe you money, why you wait? So,
right. Just have money sitting out there, just lingering. Like, get it now before it turns to dirt, and they keep printing more.
Right. But they give it away, right?
Right. They won't give it to somebody else.
Right.
All right, people. It's the end of this one, but stay tuned. Devin's gonna come back and give us some more in-depth tips. Feel free to ask any questions down below that you might have, and topics that you might want to dive into a little bit more. If you got a business that needs some avoidance of taxes, not no evasion. We ain't trying to evade no taxes. We try to be like the Jeff Bezos and don't pay any taxes. That's what we're trying to do here. So be no more accountable. We'll get you there. All right. And until next time, we're out. Peace.